Michael Burry, who I actually referenced him last episode. Dr. Michael Burry, who he got pretty famous after the Big Short situation came out after that movie. He was one of the ones that actually bet on the collapse of the economy in 2008 and made billions of dollars off of that. So he's back, and he's back on it. He's back on his bullshit, and the whole world is scared. So I'm gonna actually just read what happened. So Dr. Michael Burry, renowned for forecasting the 2008 housing crisis collapse as depicted in The Big Short, has stalked over 1.6 billion in potential Wall Street downturn. Recent SEC filings reveal Burry's fund, Scion Asset Management, has invested in put options against both the S&P 500, 866 million, and NASDAQ 100, 739 million. These moves represent over 90% of his portfolio, signaling a significant bearish stance. However, Burry's position has appeared inconsistent. Earlier this year, he ambiguously.
Yeah, we got you. Teamwork.
Tweeted sell to his vast followers, only to retreat in March, admitting I was wrong to say so.
My bad.
So despite his bearish bet, the S&P 500 and NASDAQ both have shown substantial growth this year, increasing approximately 16% and 38% respectively. Now, this has been a bad year this has been a bad month for the stock market.
August.
Yeah.
August historically.
Yeah.
No, like this month, 2023. August.
Yeah, this August. Yeah.
I'm saying this has been a down month, but for the year, the market has been up. So being that he's putting a bet that the market is going to go down, a lot of people are a little nervous. So is this blown out of proportion, or is this something that investors should pay heed to?
I think it's I love Michael Burry, one of my inspirations. After I watched The Big Short, it's slightly overblown for a couple of reasons. Number one, when you do options, for every option, you control how many shares. Everyone put in chat, how many shares do you get to control? So I don't think the capital outlay is accurate. Number two, this was last quarter, so they're reporting the point now. But the thing about when you run a fund, you don't have to disclose your entry, your exit, the other correlating positions that you have. And also, he's not going to tell you the exact moment when he gets out. When I was talking to Josh this weekend, there's a couple people that always get great headline, a great click through. Michael Burry, Kathy Wood, Mike Novogratz, Elon Musk, Kanye West. If you put any of them in an article about investing, or Warren Buffett, you're going to get clicks. So I think for those of you who have been doing research, you are already aware of this position. August historically is a down month. It's a lighter month. So we've only been down maybe 3 or 4 weeks since those all-time highs. So I know a lot of people are asking, is this overblown? I don't think it's overblown. I think it's a great hedge overall to have in the market. But if you go look at the other positions that he has, he's long the Japanese ETF, which is a great exposure play because their indexes and economy has been going up. But if you really think the market is going to fall apart, he would have shorted the Nikkei, the Japanese index, German DAX as well. So I think this is more of a hedge than anything. Will it be profitable in it? Yes, but you do have to take in consideration when Mike has these positions on, he's usually too early. So when he's short, he's getting in short too early. When he's going long, he's in too early. So I wouldn't follow this as a signal to get in, but it is a very good trade on his end to hedge the market for where it is currently.
I'm with you on everything you just said. You nailed it as usual. Pause. But yeah, I mean, you the timing is important, right? So like what you just said about him being in the trades too early. The other part is that by the time you hear it, it's too late.
It's too late.
Right. That's the part that we got to realize. By the time it becomes news, that trade has already been put in 2 to 3 months probably prior.
Or he could have exited already.
Or he could have exited, and we don't even know if he bought calls. We just know that he made puts. So when he makes the call or the put call in January, and by March, who knows? As he's seeing this trend, he's probably putting more trades to offset and hedge his positions. That part you never gets displayed.
Yeah.
So even now, I mean, I guess after he put that prediction, his account kind of got disappeared, which is weird. But this is not something. It's news because of who it is and because of the success he's had in 2008. But like you said, if he looked at it as a global economy, he would have been making puts throughout the world. And that has, well, at least we don't know. Again, we don't know what has happened. And so this is not something that, I mean, personally, I would be looking at and saying, all right, well, if Mike's doing this is something that I should be doing.
My time to get in. Yeah.
Right. It should be something that of note, like, okay, this is something that's happening. But again, we don't know the timing of it. We don't see every transaction that is made with every trader. We don't see those parts. We just see the headlines. Yeah. And so this feels more like a headline to have an article, but take note.
Great headline.
Yeah, great headline.
But if you're reporting something a quarter or 3 months too late and you don't know when someone's going to exit, in the grand scheme of things, it does not really matter. Do I think we'll have a pullback? I mean, we're going through one now, but it's not like we're facing anything that we're facing in 2020. So yeah, please be considered. And for everyone who's like, well, Mike got lucky in one trade, he provided 500% return for clients. And it was a good lesson. If you watch the movie, there were clients complaining even about the 500% return. They hated the strategy all the way through. They didn't believe when the premiums was going up. When he returned 5x, they were still upset once they got taken out of the fund. So you have to be very mindful. Also, he could have an open straddle. Like, there's a lot of layers to this, but you have to look at the entire portfolio to see, to get a true picture of what's going on.
And even August, this is not something that's atypical. This is typically how July, August usually move when we talk about trade volumes and, pullbacks, and then the end of the third quarter, September, and we saw it. Like, that's what I said. If you've been watching Market Money, we've been through some of these type of cycles where we've seen August has been a pullback throughout the month. At the end of the month, slight trend up, and then September, as the third quarter kind of ends, you start to see a trend down. So this is typical for the summer months.
Yeah, I remember in August 24, 2015, that's when I placed like my first really big swing trade, when I felt like, okay, I had this. Same thing was happening. Nikkei was falling, Russell was falling, Dow was falling, ES was falling, and then things slowly start to turn around the next year. August is a month that's usually slow and the volume lacks, or if you're a short seller, that's a good time, July and August, to look to begin to build your positions to short.